Hi, my name is Yasha and I help young men invest in the stock market. So today we are going to do something different because today we are going to talk about why does the stock market move and how to deal with that, okay? Usually I do stocks analyses, but I want to try something else, okay? Now, what are we going to talk about? We are going to talk about first point, why does the stock market move? And second point, some tips and tricks on how to deal with that. So I don't have enough space on my phone because I'm recording with my phone. So this is going to be now this video and the next video is going to be this, okay? Now, before we start, why should you even listen to me? As you know, my name is Yasha and I help young men invest in the stock market. And then when you have more trust for me, the first link in the description will take you to my one-to-one coaching where I will teach you everything, and I absolutely mean everything about it. Now, let's begin with the actual video. So, why does the stock market move? Especially in the last few days when it crashed massively. What is going on? Why does that happen? Here are the 4 reasons that I experienced in my investment career, so to say, since 2017 up until now. So, first reason why stock market moves are the people. Second one are the events. Third one, traders and popular investors, and the fourth one, earnings reports. So let's begin with the people. The main reason why people make stock market swing, so to say, is because they are fucking greedy. And because of the greed, they are selling and buying stocks mindlessly. Now let me explain that in an example, okay? So here we have one stock market chart, let's say, and for this stock, let's call it Tesla, okay? It's TSLE, if I'm not mistaken. So what happened with Tesla was like this. Tesla at some point was trading really low, like maybe, let's say as an example, 5 euros, okay? And then Elon Musk started to do a lot of promotions, a lot of marketing, and then people actually here at this point, they saw that Tesla might have a good future, Tesla seemed to be quite a good stock with good financials, with nice goal, nice vision, you know what I mean? So people here at this point started to buy it, and they were buying and buying and buying, and then because of that buying, they brought the price up. So they brought it here to, let's say, $15, okay? And then at this point was when everyone started to know Tesla, where Tesla became much more familiar. And then at this point also, let's say Tesla was fairly valued, okay? Because as you know, stock is fairly valued when intrinsic value is the same is the same number as current stock price, and P/E ratio is around 15, okay? At that point, Tesla, let's say, was fairly valued because P/E was 15 and intrinsic value was the same as the price. But what happened was that people got greedy because they saw this amazing growth from 5 to 15 euros and they wanted to keep that going. They wanted to make even more money. So here everyone started to buy it, and then they drove the price up until, let's say, 100, okay? And the thing is, now everyone started to buy it, overpriced and overvalued stock. What does that mean? Very soon that means that the stock will fall, for sure, okay? Because if the stock is overvalued based on the financial data that we have, of course it has to drop, because nobody, or at least smart investors like you and I, we will not buy it, okay? So what happened then, people started to see that the price might be a bit too high for this overvalued stock, so they started to sell it. And what happens when everyone starts to sell? The price drops massively. And that's why here the people in this part started to sell mindlessly, just like they were buying here in this part, also buying mindlessly. You know what I mean? And this is the reason, one of the main reasons why stock market goes up and down, because people, due to the greed, start to buy, and then because of the fear, they start to sell. They don't think rationally, they use their emotions to buy stocks instead of their brain. So I really recommend you do a proper research. Good stocks will not crash. I can guarantee you that. Or even if they drop a bit, they will go up again because they are amazing stocks with amazing financials that we smart investors find and then invest into them. You know what I mean? So that's it, okay? Now, another reason why stock market goes up and down, and especially why it dropped in the last few days was because of the events, okay? And there is one event that happens all the time, which are those guys right now here. This guy and his company and his friends, whatever. So they are the Federal Reserve of United States of America. I don't know if that's the official name, but they are the Federal Reserve, the Feds, the Central Bank of America, okay? And what are they doing? They are deciding the interest rates. Now, interest rate means how expensive the money is, like how much you have to pay back when you get a loan, okay? And the lower the rates are, the cheaper the money is, the less you pay for the loan, so the less you pay back, and the better it is for the economy, okay? And as you can see here again, the title already says, yeah, the Feds hold rates steadily, are we going to get a cut? And then they are constantly discussing this, yeah, cut, yes or no, are they going to lower or not? And whenever they have a meeting, and if they don't decide to lower the rates, the stock market crashes. Like, I mean, not crashes, but it drops significantly. All the fucking time. All the time. So, whenever you see like sudden loss of so many stocks, whenever the stock market drops massively, just like in the last few days, that probably means that the Federal Reserve had a meeting and they didn't decide to lower the interest rates. It's that simple. It's always like that. And the good news about this is that this is only temporarily, because even if they don't decide to cut the rates, okay, yeah, stocks might be a bit lower, but then at some point they will cut them and then the stocks will grow. So whenever the stocks are lower because of that event, because of that meeting, we just buy. It's that simple, okay? Another type of events, so to say, next to Federal Reserve are those unexpected events that happened. For example, you are already familiar with Donald Trump assassination, so they tried to shoot him. And when that happened, his stocks went up massively, but I really mean massively, by 30%. And then after that, they dropped again massively because of the reason that I don't know. Maybe people were thinking, this is just something temporarily, so they weren't keep buying the stocks, okay? So whenever something like that happens, good news is that this was just one-time event, so they tried to shoot him, but now they don't try to shoot him anymore, at least at this moment. So whenever that happens, you know that, okay, stock market panicked, the people panicked, because I told you they are selling and buying mindlessly. So they panicked, they started to sell, but that's it, If the company is good, it will not drop that much for sure. It will drop a bit, but then it will go up again, okay? This is the rule number one of the stock market. One of the rules that I unofficially established is that good stocks never drop. Good stocks will always grow. Even if they drop, they will drop just a bit and then they will go up, okay? Now, another reason why stock market drops are traders and popular investors, okay? Now let's discuss the traders. So what are traders doing? Let's say that here we have a little stock market chart, and let's say that this is a Visa stock, okay? We have Visa. So what are they doing? The traders are doing like that. Wait, let me take a pen. So here, let's say that Visa is priced again at 5 euros, okay? Just to make an example easier. And then the traders see that Visa is actually quite a good stock, so they buy it, okay? They buy it, and because of their buying, the stock goes up. And then here at 10 euros, they are traders, so what are they doing? They care about the money. They are buying and selling stocks every single day, okay? So they got here 5 euros profit per share, so they sell the stock here, and then the stock goes down. And then because Visa is an amazing company, they buy it here again, and it goes up again, and they sell it. They buy and sell, buy and sell, buy and sell, buy and sell, okay? And because of that, traders are like trying to catch, that quick profit. And because of their buying and selling, the prices also go up and down, up and down, up and down constantly, okay? Now the thing with traders is that they are playing different games than we are, okay? Because we are investors. So what are we doing? We are buying stocks and not selling them because we are investing in legit businesses. We are not thinking about this quick profit, okay? So whenever Visa stock, let's say again, Visa stock goes up and down, up and down, up and down, up and down constantly. What are we doing? We are only buying. But the thing is with traders, they are buying here and let me show you. They are buying here and then selling, buying, selling, buying, selling, buying, selling, and so on and so on. But what are we doing? We buy here, then maybe we buy here, then maybe we buy here, then we buy here, then we buy here, here, maybe here, and maybe here, you know. We are just buying, and our window of buying is much more consistent because in my personal case, I buy once per month whenever I get salary. Right now I have a bit of extra money, so I'm buying twice per month, you know. I have that consistent window of buying where this time is the same. But traders only care about the money, they care about short-term profit, so they are constantly buying, and that's why, and selling, buying and selling, buying and selling, that's why they drive the prices up and down, up and down, up and down. And ignore the investors because they are, ignore the traders because they are playing different game that we are. I told you, they care about quick profit, we care about long-term profit, okay? So whenever you see here on Yahoo Finance, some, I don't know, traders are doing this and traders are recommending this stock, nah. They are recommending it for trading. They are playing different game. They are playing Minecraft, but we are playing GTA. Completely two different games, okay? So ignore them, okay? Another thing that why stocks go up or down are the popular investors, okay? Warren Buffett is one of the most famous investors in the planet. And what does he do? For example, here we have a little chart of Chubb Insurance, okay, which is one stock that he bought recently. So let's say that Chubb was priced at 5 euros again. He bought it because he saw that Chubb Insurance is actually quite a good stock. So the price went up because of him. Just because Yahoo Finance published one article about Warren Buffett buying Chubb Insurance, then everyone started to buy Chubb and then it went up. It's that simple, okay? Because people are generally following those investors who are successful. Warren Buffett, Peter Lynch, and then all of those, BlackRock, Chase, JP Morgan, and all of those guys, all of those popular big CEOs who are investing in stocks again, okay? So whenever Warren Buffett or all of those other people, whenever they buy or sell something, you can try to kind of predict that the price will go either up and down based on what is Warren Buffett buying or selling, because whatever he does, people will do as well. And if he is selling, the price will go down because everyone will sell as well. And if he is buying, price will go up because everyone is buying as well, okay? And now we come to the earnings reports. And here we have a chart of MasterCard, I think. And then here we have another stock, but here the picture is covering the name, so let's call this stock an X, okay? Now, earnings report are published 4 times per year, each 3 months, okay? And whenever earnings report are being published, you can either know that the price will either go up massively or drop massively, because stock market is always trying to predict whether the earnings report are going to be better or worse than what they predicted, okay? So the stock market has a lot of financial analysts who are constantly calculating whether the MasterCard, in our case, will have more money, more profit at this point or not, okay? So what happened here? They had more profit than stock market expected, so the earning report beated the estimation. That's why the price went up massively, as you can see right now here. Or let's say that MasterCard would not beat the expectations, then the price would go down massively, okay? It's that simple. So what happened here? The price went up. Same with this X stock that we don't know which one it is. They beat the estimations and then the price went up massively, okay? And now you are wondering, why did then the price here drop a bit? And here as well, why did it drop? Because of the traders. I'm telling you, they are catching quick profit. So whatever happened here, they saw, okay, the price grows significantly because MasterCard has beaten the earning expectations, okay? Now traders then wait 15 minutes to see where that momentum is going to go, where the trend after the earnings report is going to go. And in this case, it went a bit down, as you can see right now here. So traders at this point started to sell again. And they drove the price down. And then here, people saw that, okay, the price went down significantly. So maybe now it's a good entry point. And then they started to buy. And then they were buying. And the price went up. Same here. The traders were waiting 15 minutes up until here to see where the momentum is going. Momentum in this time was going down. So here traders also started to sell. The price went down again. And then here people saw that, okay, maybe this stock is actually quite good. So they started to buy and then the price went up. It's that simple, okay? Now, tips and tricks are going to be for the next video because I don't have that much space on my phone, as I told you. So now you know, bro. To summarize this really quickly, market moves because people are greedy and they are not thinking whenever they buy stocks because of the events, probably because of the Federal Reserve, then because of traders and popular investors, whatever they are buying, people will buy as well, and about the earnings report, if they beat or not the expectations, okay? Now this is about it. See you in the next video, do the hard work and see you on top of the world.